It's Friday, November 5th, 4:09 p.m., and we're looking at the daily S&P 500 update brought to you by freechartvideos.com, using time-honored techniques to understand modern markets. This video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. And I am not a licensed professional, just a guy that draws lines on charts. So let's look at a chart and draw some lines. Okay, here is the hourly chart of the S&P 500. You'll remember that we had identified a channel that has been working since almost the very 1st of September. So we've got 2 months of this channel bringing the S&P 500 almost straight up after it broke off of the 1040 lows. Now I'm just going to say something right here. I want to be perfectly frank with anyone who's watching this video. I would say I could understand somebody being bearish around here. Once this 1123 level was taken out, however, there's no excuse for anybody to be a bear after 1123 was surpassed, because that's the neckline of an inverse head and shoulders that points to taking the prices between 1240 and 1250 as a minimum target. Yet, I continue to see these YouTube videos posted all over creation, people calling this a fake market rally, a false rally. This is just it's all got all kinds of gaps in it, and those gaps are just going to suck the prices down into some Bermuda Triangle vortex of bullish doom. Hogwash. That's all a bunch of junk. And it frankly ticks me off that so many people are being clearly misled by, quote, analysts who have their bearish sentiment in place, and they pick and choose whatever indicator, whatever index they can use to support their mistaken ideas about this market. Now let me tell you how I really feel. No, I'm ticked off because, folks, I do this because I'm trying to show you something that I've learned. I'm trying to show you something. I'm not trying to convince you of something. I'm trying to persuade you to some degree to open your eyes and look at what the market is doing. Forget what you think it is supposed to do. Open your eyes. Look at what the market is doing. Okay, let's back off from this just a hair. For those of you who haven't seen any of my videos, this is an inverse head and shoulders pattern. When the neckline, which is the line drawn across the middle two peaks in the pattern, when that breaks out, when that breaks up, then you're looking at a very bullish situation. I watched a guy today on a video say that, well, these head and shoulders patterns, they work about half the time. Hogwash. They work about 80% of the time. If you have a head and shoulders pattern that just, let me put it to you this way, if you keep seeing head and shoulders patterns, whether they're inverted or standard, and they're not working, you're doing something wrong. You're calling something a head and shoulders that's not a head and shoulders. And that's been done before. So anyway, this is a textbook head and shoulders pattern that broke out. It points us to 1240 to 1250 as measured by the depth of the head added on to the neckline. Thusly. So there's our target. We are almost there. I've been calling for this target ever since the breakout. I think we were at 1130. I'm saying it's going to 1240, 1250, people, and getting all kinds of grief and and people, I don't want to say they're calling me names, but basically they think you're just a perma bull. Well, I've been a perma bull since the S&P was in the low 800s, but I think I've got the chart to back it up. Unlike the perma bears who've been perma bears since the 800s, and they're just saying the big crash is just around the corner, it's just around the corner, then they're thinking to themselves, damn it, it's just around the freaking corner, where is it? And they're getting killed in the markets. All right, let's look at something else. Here's a 10-minute chart, and there are a couple things I can show you here. For one, this teal line that I've highlighted is the ascending triangle boundary that was formed in this area over about the past, well, not the past days, but over an 8-day period that that ended a day before yesterday when it broke out late in the day. Yesterday we really moved up strongly out of this. This line right here is the expected move one would want out of this triangle, but it's got more steam in it. I did not sell. I did sell a couple things today. I sold the SOXL semiconductor 3X bull fund. I sold that because it had hit the top of its channel and started to show some weakness. But I want to show you something. This line right here is the previous S&P 500 high for this year, and you can see that the prices today 3 or 4 times bounced on that line and then started to move up late in the day. We also closed over the top of the channel that has been working for 2 months. So my feeling at this point, and my gut feeling, is that this market is quickly going to get up to that mid 1240s, somewhere between 1240 and 1250. I think that's going to happen pretty quickly now. For a while, I thought we might go sideways and meander and just kind of piddle around for a while. It might take a couple weeks, and we still could hang around here for a while, but obviously getting over that previous year high, closing over that previous year high. And if you also look at this line's going to disappear when I move in, so don't panic, it's still there. If you look at the pattern that we set up today, again, we ended up in something of a descending little pennant. That little pennant, I believe, is going to work properly, acting as a consolidation area. So from here on, guys, I'm looking for that mid 1240s as high as 1250 as a minimum target. If it gets up there and starts to flag again, you might not want to sell. You might want to just take a look at it. There's nothing really up there in the chart that says, well, I can't really back off far enough, but there's nothing really in this region that says we're going to run into expected resistance. The only reason I'm saying I have this line as a target is because that is the target that we get from the depth of the inverse head and shoulders. I reiterate, that is the minimum target. I'm not telling you to sell when we get there. I'm saying expect to get there. And then we see if it keeps going up or not. Look, I hope you've enjoyed this video. I apologize if I sounded a little bit strong about some of the bearishness that's out there that seems to be just leading so many people into losses in this market, when frankly you could have been listening to me and at least examining what I have to say as an alternative voice to the bearish prognosticators who seem to still have their following for no good reason. So look, take care. When you get a chance, I'd appreciate it. Stop on over to freechartvideos.com And I'm probably going to see if I can take a look at a couple more stocks or ETFs and get those posted up today too. Hey, I hope you guys do great in the markets next week, and I hope this is a help to you. Please tell your friends if it is. I need all the traffic I can get.